2026. Why the smartphone market is headed for another tough year. After years of instability, the global smartphone industry finally showed signs of recovery in 2024 and 2025. Shipments stabilized, demand slowly returned, and manufacturers hoped the worst was behind them after the brutal 2020-2023 downturn. But now, as we look ahead, the outlook for 2026 is turning dark once again. According to multiple research firms and industry analysts, 2026 may become the first year in several years where smartphone shipments decline, marking a reversal of the fragile recovery the market just started to enjoy. And smartphones aren't the only concern. Computers, gaming consoles, and other consumer electronics are also expected to see declining sales. Not because people suddenly stop caring about technology, but because prices are rising across the board. The question is simple. Why is this happening again? A fragile recovery comes to a halt. To understand why 2026 looks so weak, we need to rewind slightly. In 2022, global smartphone shipments dropped sharply to around 1.20 billion units. Post-pandemic demand faded quickly, inflation hit consumer spending, and supply chain disruptions continued to haunt manufacturers. Things didn't improve much in 2023. Shipments slipped further to roughly 1.17 billion units, marking one of the lowest points for the industry in years. It wasn't a collapse, but it certainly wasn't a recovery either. Then came 2024. The market finally bounced back with shipments climbing to approximately 1.22 to 1.24 billion units. Growth continued into 2025, albeit slowly, reaching an estimated 1.25 to 1.26 billion units. For a moment, it looked like stability had returned. But now, research firms such as IDC and Counterpoint are changing their forecasts. Instead of growth, they now expect global smartphone shipments to fall by at least 2% in 2026, making it the first year-over-year decline since 2023. That may not sound dramatic, but in an industry this massive, a 2% drop represents tens of millions of devices not being sold. The real problem: exploding component costs. So what's driving the slowdown? The biggest culprit isn't weak innovation or lack of interest, it's costs, specifically memory chip prices. According to Reuters and industry supply chain experts, prices for RAM and storage chips are climbing at an alarming rate. Analysts project memory prices could rise 40% to 50% in early 2026, following an already massive 50% jump in 2025. Some memory products have reportedly seen price increases of up to 1,000% over just 2 quarters. That's not a typo. And these price hikes don't come from shortages caused by natural disasters or factory shutdowns. They come from demand, especially from the AI sector. AI is reshaping the electronics industry. Companies like Google, Microsoft, and OpenAI are consuming enormous quantities of memory chips to build and expand massive AI data centers. Training large language models, running AI inference at scale, and supporting cloud infrastructure requires huge amounts of high-performance memory, far more than consumer devices ever needed. As a result, memory manufacturers such as Samsung, SK Hynix, and Micron are prioritizing enterprise and AI clients, where profit margins are higher and demand is relentless. From a business standpoint, this makes perfect sense. From a consumer standpoint, it's a problem. Smartphones, laptops, and gaming consoles are now competing for components with trillion-dollar AI investments, and they're losing. Who pays the price? Consumers. Electronics manufacturers now face an uncomfortable decision: absorb the rising costs and accept lower profit margins, or pass the costs on to customers through higher prices. Analysts widely agree that while some companies will absorb part of the cost, most of the burden will end up on consumers. That means higher prices across smartphones, laptops, Macs, tablets, gaming consoles, single-board computers. And when prices rise, demand usually falls. PCs and consoles won't be spared. Smartphones aren't the only category under pressure. Industry forecasts suggest the PC market could shrink by nearly 5% in 2026. The gaming console market may decline by over 4%. Even companies like HP, Dell, and Lenovo are already planning price hikes of up to 20% in early 2026. Raspberry Pi, often associated with affordability and education, has also announced price increases due to rising memory costs. Retailers such as Best Buy have warned that higher prices could significantly reduce consumer demand, especially in price-sensitive segments. Low and mid-range brands will feel it most. Not all companies are equally prepared to handle this storm. Low and mid-range manufacturers like Xiaomi, TCL, and Lenovo are expected to be hit hardest. These brands operate on thin margins and rely heavily on competitive pricing. When component costs spike, they have far less room to absorb losses. Premium brands, on the other hand, have more flexibility. Apple's advantage and its limits. Apple is often cited as being in a stronger position than most competitors, thanks to massive scale, tough long-term supplier contracts, strong pricing power. Apple can sometimes absorb cost increases without immediately raising prices. In the past, the company has even absorbed tariff-related costs rather than passing them directly to iPhone buyers. However, even Apple is not immune. If memory prices continue climbing at the projected pace, analysts believe Apple may eventually be forced to raise prices, especially for storage-heavy devices. The difference is that Apple can raise prices without killing demand, something many Android manufacturers cannot afford to do. What this means for consumers. For everyday buyers, 2026 could feel a lot like 2023. 6 ak everyday bitoni emo. Slower replacement cycles, higher prices for new devices, longer use of older phones and laptops. Consumers may hold on to devices longer, repair instead of replace, or skip upgrades altogether. Ironically, while AI is booming faster than ever, consumer tech could enter another cooling phase because of it. Final thoughts. The electronics industry is entering a new reality. AI isn't just changing software. It's reshaping hardware economics, supply chains, and pricing models across the entire tech world. 2026 may not be a collapse, but it's shaping up to be a reset year. One where growth slows, prices rise, and consumers think twice before upgrading. The smartphone market survived the worst years before. The question now is whether it can adapt again. In an era where AI comes first and everything else follows.